All right, everybody. Stocks by the numbers. Welcome back. We're looking at Arcos Dorados Holdings Incorporated, ticker symbol ARCO, listed here on the New York Stock Exchange. Stock closed 873, up 12 cents, about 1.4% on the day. It's up another 7 cents right now, currently after hours. Dipped down here below this key trend line that I pointed out for a few people in the Discord, and we can see that we came up. 873 is the mark. 873 is right where we closed. And again, we're up a couple of cents after hours, so we might have a bounce now, maybe back up, potentially retest this moving average here, kind of midway, maybe 928, 929 area potentially. But what I wanted to point out also is a couple of things. First of all, again, I mentioned the Discord, free for you guys to join. And what I've done is I've left a link in the description, but I left an expired link because I think that the way like these bots are working is that any link, they try it. And obviously, if it's a fresh link, they're able to join the Discord and, they start messaging people and impersonating me and trying to talk to you about like some random private course or something like that. So that's why I just leave an expired link in there. And it seems to be working. I haven't had any random bots join the Discord lately. So I just bring that to you because if you are looking to join the Discord, all you got to do is just leave a little comment letting me know that you want a Discord link, and I'll reply to you as soon as I can with a fresh Discord link, fresh invite, and you can bring yourself in. But getting back to ARCO here, so this is basically McDonald's, and they operate for the most part in South America, but here we can see Aruba, Colombia, Guadalupe, right? We're in Puerto Rico, Trinidad and Tobago, Virgin Islands, Venezuela. So with the what's interesting to me is first of all I believe Argentina doing a lot of big things, but also more importantly, it seems that the economy seems pretty steady right now, in my opinion, out of South America, and it brings new holdings to my mind, right? NU, remember that one? And that was kind of like this digital banking account that started up in South America, and it's just been off to the races. So, in my opinion, it seems like there is some discretionary funds in South America. And you have obviously something like McDonald's, there's a brand name that a lot of people know, and as we saw, we're spread out under this umbrella anyway of ARCO. We're spread out across basically most of the countries in South America. We got a couple of territories as well, right? Virgin Islands, Puerto Rico. So that's why, even though I know down here you see a couple of reds because the EPS has been off, the revenue, in my opinion, does seem pretty steady and is slowly growing. And also, we can see, look at the run that this stock went on. I mean, we were up here at about $8. Looks like we formed almost a double top, so we started to pull back. Then we know that the lockdowns happened. We came all the way down to sub $3. And then look at this run here. I mean, we're talking from the bottoms here of March, April 2020, going all the way to the highs right after the bull drop this year of January 2024. That's almost a 4-year stretch of going on the up and up. We had a couple of tiny splits there on the way up, but the stock continued to climb, and as we see, got up above $13. Now it looks like we've kind of been channeling down. I know we had a flash break below this channel and then a quick pop out of the channel, but in my opinion, it seems like we're kind of staying in this downward channel. And I know it would really suck if you got in recently here at $9 or $11, and now the stock's sitting at 8, and you may potentially, continue down here and come down to the high sevens, mid sevens, maybe, who knows. But in my opinion, it went on this run for a reason. And it's because of that consistent growth. And again, people understand what they're buying. So as long as the numbers don't really fall off a cliff, technically, in my opinion, this stock should be more than fine, especially in the longer term. We have a market cap 1.84 billion. We're getting a slight dividend, currently yielding out about 2.8%. We're only trading 10 times earnings. Look at our beta as well. Again, I know the stock has been in a downtrend, but it's been trending downward technically for what, like 7, 8 months. And then before that, it was up for 4 years, right? So that's why when people see these short-term sell-offs and the short-term volatility, what do I always say? In my opinion, if something looks solid in the numbers and you have healthy fundamentals and it seems like the business is growing year over year, quarter over quarter, then you have to deal with the short-term volatility to look for that long-term growth. So again, we could channel and stay down here and come all the way down here into the sevens, but then we can bounce and who knows, maybe go on another 2-3 year stretch of the stock just being up and up. So the numbers, though, in my opinion, look very nice here. There's a very low PE. I think the market cap is undervalued here at this moment. And again, I appreciate the fact that the EPS has been light, but look at how the tightening is taking place, right? We missed by what, over 5 cents, 17.5%. Then we missed by 2 cents, 12.5%. Then we essentially beat, looks like we missed by about half a cent. Yeah, look at that, a third of a cent. Okay, 13 and a third. The company comes in with 13 and beats on the revenue, which they have been consistently doing here for several quarters in a row, right? That was the last quarter back here. And look at how much they missed by. Literally a drop in the bucket, 0.25%. And then they come out and it's been 4 quarters in a row that they beat on revenue. So this is why the revenue, in my opinion, does seem to be steadily climbing. But if the EPS, if it had a little wrench thrown into it now, into its machine, and now it has to kind of get itself back on track, now you're looking, even though this next EPS expectation for Q3 is up at 18 cents. In my opinion, based on how these losses have been tightening and now we're seeing this curl up, in my opinion, they have a pretty good chance to actually meet or beat that EPS number now next quarter, in my opinion. That is the middle of November. So you still have about 2 months before next earnings come out. And again, the profitability dropped down, which we saw in the EPS. Still profitable, though, as you see. Net margin down, but it's sitting at 2.4%. Net income over 26 million, which is why now we had the big run up and now we're coming down. And this is why we may see the curl now in the net margin percentage, and the profitability may start to climb over the next 2, 3, 4 quarters, right? But anything can happen, but we'll see. But the revenue here, as you see, Q2 last year, 1.04 billion. Q2, this last quarter that they reported, we're up to 1.11 billion, right? So this is why I understand sometimes these companies slightly miss these expectations. But overall, if you're seeing growth in revenue, in profitability year over year, in my opinion, that is a very good sign. And now if we go Q3, we can see this time last year, 1.13 billion. And the estimates right now for next quarter, 1.15 billion. See how they're just slightly ticking up these estimates? And in my opinion, it seemed like they were doing that with regular McDonald's stock as well, symbol MCD. And I always felt that they would always kind of like low ball or like middle of the road lay out these EPS and these revenue estimates, and it seemed like no matter what, like clockwork, McDonald's was beating 8 out of 10 times, 9 out of 10 times if you go back and you look at the history. So that's why something like this, I appreciate the fact that they're just slightly ticking up these estimates, because of course that is a good thing for a stock like ARCO, because as long as the McDonald's businesses in South America and these territories are doing well and nothing big happens, then chances are the revenue is slowly going to trickle in and snowball and get larger and larger and larger, and the company has another good chance to beat on these revenue estimates, in my opinion. And of course, if they do happen to report even close and they report 18 or in line, 18.5 cents a share, in my opinion, that would be a good sign. But if we just look at straight up revenue here, look at the growth coming out of 2020. Again, we were almost at 3 billion. Everything gets locked down. Revenue drops down to 2 billion, bounces back to the high 2 billions, then goes up to 3.6 billion, then goes up to 4.33 billion. And of course, coming right out of the lockdowns, we went back to profitability as well. You can see positive net margin percentage. So this is why, in my opinion, I really don't think the business is struggling. And I think the stock is just hanging out and getting ready to potentially blast off again. My only concern, as I always say, is the fact that the market's rallied like crazy, and if we have a big sell-off, then technically everything will most likely start to drop down. However, at the same time, even though this stock is listed on the New York Stock Exchange, it's technically an international business. So if our American markets do begin to sell off and correct, we may potentially see some revenue, some money flowing into an international equity like ARCO. But also, we're down here at this trend line. You can see this is going from the bottom of, looks like the first week of April 2020, connecting to that bottom there, November 2021. And I drew that up across, and you can see, if we zoom in, you can see that we had the quick break right below that trend line, and now we bounced and we came right back above it. And of course, this 873 key level is exactly where the stock closed and had to bounce back. So that's why I'm saying we now could potentially break this 873 mark. But if we stay in this downward channel, we may just be gearing up. And if we have a good rebound quarter here, especially on the EPS side, that may be the catalyst to really pop the stock back up. And all of a sudden you're seeing 1080, 1140, and we're back to double digits. You understand? But again, we have to take it quarter by quarter, day by day. But the fundamentals, again, just laughable. Laughable. So if we look at the debt here, 1.6, 1.69, 1.69, 1.68, okay, so it's been kind of just holding for the last couple of quarters. The free cash flow, again, I mentioned this last time, but I know I didn't make a video, so we'll go over it quick. But Q2 last year, free cash flow minus 18 million. Now this last quarter, minus 12 million. So this free cash flow here for Q2, even though it's still negative, it just increased by about 33% year over year. Definitely nothing to sneeze at. Company's holding a little over 100 million in cash right now. This time last year it was over 200 million, but also the fact that the debt hasn't risen too wildly, while at the same time the cash is technically positive and the free cash flow seems to be moving in the right direction. In my opinion, doesn't seem like a big deal that the cash on hand itself has gone down quarter over quarter, but that's just me. We have liabilities outweighing assets here in the short term, but in the long term we have assets outweighing liabilities. If we come over here to our balance sheet, we can see that we still have positive equity. And we were climbing all the way up to about $500 million. We're having slight pullbacks here the last couple of quarters. And that's why I'm saying now it may potentially, you have a big run up. Even in the numbers, it works like the charts sometimes as well. So that's why I always say I like to look at numbers and charts and not just, see where the moving average is and just try to, boom, jump in a trade just because I looked at one or two technicals. You kind of have to cover all the bases here, in my opinion. But, we run all the way up to 516. Now we have a slight pullback. Maybe next quarter, again, a slight pullback. And then, we may start running back up to 500, 520 million, 560 million, right? Now all of a sudden the equity's heading back up. The book value is rising. And now the stock probably has to rise as well, right? But if we look at the book value per share as well, we've been slowly climbing, had a run up to 245, slight pullback here to 223. So we're trading a little less than 4x price to book right now, but the equity sitting here at 470 million, total debt 1.68. So if we subtract the debt from the equity, we're at negative like 1.25 billion, and the company brought in 4.25 billion, right, which would bring us to positive 3 billion in my opinion. Plus we had profits off of it as well, about 180 mil. So that would be 3.18 billion. And we also have 100 million in cash. So that'd be 3.28 billion in my opinion. And you can see the market cap here. Again, that's the way I personally look at the quote unquote fair value of the business. So we're at about what, like 3.2 billion, whatever we said. And we can see the market cap right now, 1.84 billion. So overall, long term, I do believe the stock is undervalued and can potentially almost double from this level, which would bring us to, $16, $17 a share, which would be new highs. And of course, it would bring the PE only to about 21, which is still kind of fair valued or maybe even undervalued when compared to a lot of other stocks in the markets here trading at near these highs. So that's why I'm saying I know in the short term it's been channeling down, but overall it does seem like the business is growing nicely. Look at the price to book now, sub 4. That's the lowest it's been. Look at this, going back the last 7 or 8 quarters, which is why, again, we went on a 4-year run. Now we're in like an 8-month consolidation downward channel, which is why it may potentially continue for about the next 2 months until we go into those earnings. And then if everything goes according to plan and they're able to beat on EPS and revenue, that's when you may potentially see the breakout from the consolidation zone. And we can have a nice healthy bounce here, or even down here. We can have a nice healthy bounce here, and then all of a sudden we're on the up and up, potentially back to 10, 11, 12. But long term, again, unless some unforeseeable huge negative catalyst comes out on McDonald's or out of South America, that affects the currency exchange rates and how people here in the States on Wall Street may potentially interpret the actual value of the business now. You understand what I'm saying? Unless something else really gets tossed into the gears to stop this machine, then in my opinion, it's going to keep chugging along, and it's only a matter of time. But I was mentioning to someone that this 873 level is key, and you see the flash crash, not really crash, but you know what I'm saying. You see the flash break below it, and then the next day, boom, we pop right back up to it. So this is why it may stay like this, and maybe just bounce off this trend line, and then eventually maybe break and try to retest. But technically, it would still be in this downward channel, right? So that's why I'm saying we can potentially see something like this. And then if these earnings are good, boom, coming straight out of it. And then, of course, I know we're getting ahead of ourselves because I'm talking like 4 months down the road when the bull drops. We're talking like here, right? The first week of January. I always remind everyone about the January effect, which is basically when hedge fund managers kind of reposition everything that they're holding in their portfolio, and they look at what stocks to cut, what stocks they want to add to or move money into. And that's why something like ARCO, after a nice big sell-off here for almost a year, it may be viewed as undervalued the way I'm looking at it, and a lot of these fund managers may decide to step in and start building positions in ARCO now moving forward for the next 12 to 24 months throughout 2025 and 2026. But it's all speculation. We'll see what happens. Here on the daily stock charts, we can see RSI sitting here at about 38. Technically could drop down to that 30 benchmark, but we can see that even though we were hanging out there at times, we had a little bounce, we retested, and then boom, the stock went on a big tear. You can see in July, rallying from looks like sub 9 back up to north of 10. So on a percentage gain basis, this could be an excellent cheaper stock for you to trade, perhaps, month by month, if you're able to catch the dips and sell the rips. But again, in my opinion, more of a longer term growth stock, similar to McDonald's, right? It didn't happen overnight, but if someone told you 10, 15 years ago they bought shares of McDonald's stock, you know that the position is probably doing well, and they're sitting pretty right now. But we can see the multiple retests here on the 50-day moving average, about 937, and we're a little over half a point below that. So a potential bounce here to the mid-Bollinger Band, right? MACD's just been slowly slipping, but we could potentially start to bottom out and start curling back up now after bouncing off of this around this 873 trend line. So back up to 925 again. That would be, as you see right here, almost back to this fib and almost back to the 20-day moving average as well. And then it may start to cool off and drop and continue downward in that channel. So only time will tell, but something like this 200-day 1074 might not happen until next earnings. But we'll see. Here on the weekly as well, we can see the RSI down here sub 36. So we're low, but technically not oversold. Which is why, again, you have these drops, and then you have these little rallies back up, and then you have these little drops, right? So it seems like a lot of traders are just in and out and just kind of playing with what they can take here. But again, look at this big run up. And now we've kind of been pulling back for 24. And again, we could drop all the way down here to this 200-day, 764. My trend line here, 777, right? That's why I'm saying we can potentially break down, drop down into the sevens, and then it can gear up and maybe get ready to have a good 2025. But in my opinion, in the numbers, again, I know the debt is right now 1.6, 1.7 billion, but based on the revenue they're bringing in, I really don't see it as a big issue. But we can see the stock tried to reclaim this 50-day at about 10.5 and then had a big rejection and dropped down. So bottom Bollinger Band sitting here sub 8.25, so we can potentially keep taking a haircut before we have the next bounce. But the RSI is approaching that oversold territory, so it may only be a matter of time before the stock does decide to bounce. But looks like a healthy bounce off of this support level as well, 864. So we have some key levels to watch here, but again, it may potentially just be percolating to get ready for the next pop up. Next pivot point on the way up, about 10.75. So we have a lot of action around that 10 plus level. On the daily, we can see next support level technically 820. So bottom Bollinger Band was 823, I think. So potentially that could be the next stop. And then the RSIs may start to approach that low 30, sub 30 level. And then you may have the bounce from there again back up to the nines. But overall, again, international, McDonald's, Ecuador, Venezuela, Trinidad Tobago, Virgin Islands, Puerto Rico, right? All of these places essentially outside of the existing McDonald's umbrella, which of course is the thousands of locations here in the States. And I know they have locations overseas. I know there was the McDonald's in Russia and France and whatnot. So, a little Royale with cheese. But basically, it seems like a solid business model. It seems like most of the franchises do make money and do slowly grow their business over time. So the fact that we have a big umbrella of that business outside of the existing business, in my opinion, it's growing well. And again, just looking at this, if they want to beat it up in the short term, that's fine. But over the long term, I can see why we went on a 4-year run. And as long as these numbers don't start to seriously drop off and miss estimates, in my opinion, everything should be fine. And realistically, if this market cap even trades in line with the revenue that they're doing, we're talking about a 150% move potentially from this level, which would bring us to around $24, $25 a share. Which is why, again, I know I may be swimming against the stream, and a lot of recent headlines are kind of bearish on it, but they might just be riding the wave that it's currently in. And in my opinion, I do believe that this stock will more than likely rally back up to the teens, retest and hit new highs. I'd say $15, $16 in my opinion, conservatively, which would be a nice, like 80, 90% gain from here. But that's pretty much all I have to say, and I'll end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel, and of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.